You're listening to the We Are Libertarians podcast network. Find all of our shows at wearelibertarians.com.
Libertarian Country is one of the fastest growing and most popular liberty-themed apparel companies in the world. This American-based company was founded by two brothers out of Baltimore who had a vision to create an online store that offers fun, unique, and controversial political clothing and accessories. This five-star company offers the hottest shirts, hoodies, hats, and so much more. So check them out today. This is an independently owned, liberty-loving business that basically gives you the exact type of apparel and paraphernalia that you've wanted anyway. You just didn't know you wanted it now. Every purchase you make using the link in the show notes allows a small part of your purchase to come back and support the show. So go grab some awesome Libertarian Country swag using that link in the show notes. You'll thank me later.
Hey everybody, check out the Break the Bell podcast, where we believe your voice is your most powerful weapon. We're a weekly dose of our take on what's going on in the world, mixed with a side of history. Find us wherever podcasts are found or on social media handle at Break the Bell Pod. And most importantly, never stop talking.
Prepare yourself. You're on the run with Remso W. Martinez.
We often wait until it's too late to finally get our shit together. Yes, folks, even me. Even I have sometimes tend to put things off. Oh, am I big boned? No, I just put on some weight. Oh, did I actually take care of my savings? No, I went over budget. Oh, am I actually, taking care of things now, or am I trying to find excuses to put them off because I don't like to deal with uncomfortable situations? We live in the age of inconvenience. The age of comfort is over. And for many of us, we may have seen this for a while. But the biggest thing that has been beautiful has actually been the conversations about money I've been having with many of you listening. You can go ahead and remember to, hang out, talk, chat, pick my brain, throw angry remarks at me at Hey Remso across social media and at Remso on Parler at Remso, the only Remso there. And when it comes to money, this is one of those things where it's always been taboo. I'm pretty sure that it's still taboo for many people, but it's a comfortable conversation I'm willing to have. And what I love about shows like this is I get to talk to people who are smarter than me. One of those people today is Harrison Dunn. He's an asset manager and financial advisor based out of Erie, Pennsylvania. Over the course of the last decade, he has been responsible for managing over $15 million in assets. In addition to his asset management, he is involved heavily in local politics and serves on several nonprofit boards. Harrison Dunn, it's a pleasure to have you on today.
Hey, thank you so much for having me. I really appreciate it.
So I have been on a journey myself, and that's really what helped propel me into the show that we are on right now, where basically it was enough about talking about Graham political theory and economic treatises and all this other bullshit, and it was more about how to actually take some independence, some power, some freedom back in our own lives. And money is one of those things that is incredibly uncomfortable to talk about, because when we're talking about money, we often see money as a direct reflection of our own worth, of our own actions. And right now during this pandemic, I think it's been a beautiful thing that people are now actually starting to take an assessment of their financial health. The crazy thing, and we were talking about this yesterday, getting ready for the show, and we were talking about this a little bit beforehand after, as we were getting set up. But this has been a really strange period, because what we're seeing now, and this has been going on since March, that people are actually now starting to realize that a lot of them have been running off of borrowed credit and borrowed time. Every day I'm seeing reports about how people who make six-figure incomes are, potentially millions of dollars in debt. How people who were living paycheck to paycheck, who might be very right of center, who might be very free market people, they don't like welfare and that type of stuff, were desperately, praying for a $1,200 stimulus check to come through. Yet at the same time, we're seeing consumer spending still continue to go up. And to make matters even stranger, and maybe in like a positive way, but I think if you're now getting into savings now is probably too late for you. Not only is consumer spending going up, but now we're seeing Americans, opening savings accounts and saving money at a record rate, despite the fact that they're not getting any interest off any of that. So what's your assessment of how things have been going, especially, coming from the viewpoint of somebody that has to really look at the numbers for a living and see how our actions directly impact the world that we have to deal with?
So this has been a really interesting period, obviously, for everyone. But in my own personal situation, I remember at the start of this whole pandemic, I was very ill. I am convinced I had COVID, but I was down and out and just I wasn't really able to work. And I watched the financial markets basically implode, which is what I deal with every day. Yeah, so the markets imploded, and I was concerned, gee, is there a job waiting for me once this is over? I mean, everyone's terrified of, losing money in the stock market. But what I found really interesting is the number of peers that I have that have become interested in investing or finding separate, revenue streams has exploded. I know a lot of people in my personal social circle that they use their stimulus checks to open up brokerage accounts. So that's been a really interesting reaction to me. I think it's woken up a lot of people to the fact that things aren't always stable. Bad things can happen. We sort of live in a world where everyone assumes the good guys always win. Bad things don't happen. But I think this was a great example of a situation where bad things happen. You could call it fat tail risk is the best way I could describe it.
Yeah, and I mean, this is one of those topics that, for a lot of millennials specifically, I'm only 25. This is one of those strange situations because, and I don't think this is unique to the millennial demographic, but we live in a culture that idolizes fame, that idolizes the self-worship through social media. We're constantly trying to keep up with their friends, and I live right outside of DC. I mean, you want to talk about people that act rich but have like no money. I see it all the time. And I mean, one of the best things that could ever happen for me was that out of college, I was just completely broke. I was broke. I probably had like a negative net worth. It was terrible. And it took me having to work with my degree. And at that point, I had already written a best-selling book, and I'd been on radio. I'd done a lot of cool shit. Here I am at the age of 23 or 24 working for minimum wage at GameStop. And, I just remember coming home after working like a double shift one afternoon. I was working between two different locations. I came home and I just like plopped face first on my bed. I just remember telling myself, like, I've never had to work this hard for so little money. And it was in that moment where I realized I've had so much money invested into me over the years, and this is all I'm able to do. And I mean, I was, I think the one strange thing about the Trump jobs numbers that I think often gets overlooked by conservatives is that, you had a lot of new jobs popping out during the Trump years. That was a good thing. But, a lot of them were not necessarily the jobs that a lot of people wanted. You had a lot of part-time work. You had a lot of seasonal work.
Go ahead. There no value added jobs,
Yeah. So, I mean, they're nice jobs to have for a little bit, but, it was one of those situations where it's like, I'm happy to be working because at least I'm getting paid. But at the same time, it's like, shit, this is not sustainable.
No. And that's something that, I mean, especially college grads that I know, I live with two guys who are both still saddled with student debt. I mean, they work hard, they have good jobs, but it's quite a chokehold that you get put on you coming out of a university system. That's partly, I actually dropped out of NYU in large part because the tuition bill just got outrageous. It's like $65,000. It was just too much. That's
crazy.
It's too much. And, I had started working prior to going to college, and by halfway through, I had actually started a financial services firm, and, things were going really well. So I figured, I'm not really going to these classes. Tuition's very high. it was just the sensible decision for me.
Why do you think the topic of money is such an uncomfortable thing for people to want to look into? Because if we want to talk about financial education, I think it's so funny that we have some of the most credentialed people living in our country, right now. I mean, everyone and their grandma has a fucking degree. But when you look at actual like basic financial literacy, our financial literacy rates, according to DaveRamsey.com, have been going down like every year since the mid 80s. And strangely enough, it's the Zoomers, the Gen Z crowd, the children of millennials who are actually, looking at other options other than college. They're actually looking at becoming more financially literate and more better off in terms of, cost of living and everything compared to their parents and their grandparents. But at the same time, you still have a large number of young adults who, to take that extra step to try and take some responsibility over themselves and their money, it's one of those things that they're afraid to do.
So I mean, money is a taboo thing to talk about because it's a numerical way of separating yourself from others. You have X dollars, the other person has Y dollars, and there's an uncomfortable comparison between the two, even if you're just trying to have a reasonable conversation. With 2008, I think a lot of people in the generation that you were just talking about saw their savings, their family savings, college funds, IRAs, 401ks, they saw them collapse due to pretty complicated stuff that even today I still can't wrap my head around. Going through that experience, I think, taught a lot of people you need to have a diversified income stream. You need to be not too focused on any specific asset class, and you need to be prepared for that rainy day.
Yeah, and I mean, with 2008 especially, that feels like it's almost like a million years ago, but it's really only 12 years ago. And between that, I mean, we had giant roaring economy that popped up right after 2016. And the one criticism that the Democrats have often thrown out, despite not having really any legs to stand on in terms of why they're saying what they're saying, other than just, basic political reasons. They say, well, if the economy was so roaring, why is it that people, were having to go ahead and go into forbearance for their homes? Or why is it they didn't have, at least $1,000 in savings? Why is it we had to go ahead and print everyone money so that way we could go ahead and toss them a one-time check? I don't think that second stimulus check is going to happen. I really don't think so. But it's
I don't think so
that
either.
was if it was so roaring, why is it we're in the situation we are now because people couldn't go to work for a couple of weeks, and now we're in like month 6 of the 15-day quarantine. And it's like there's a difference between the economy being good and the actual ability of people to be financially secure being good. Those are not mutually exclusive.
No. I think a big part of it is we live in what I like to call a cash flow economy. As you're talking about people living overextended credit cards, the rest of it, they're living on cash flow. And it's a constant game of cash coming in from pay, cash going out to pay off credit cards. But there's no real wealth creation or growth that's taking place in that space. So I guess that's one of the things that I'm happy to see with the COVID situation is a lot of Americans are starting to save. I think the idea of having a rainy day fund has crossed a lot of people's mind. I mean, the average American, I might be wrong on this, but I think the average American has about $400 saved away. So when you just throw the brakes on the economy, that cash flow all stops. And, that $400 is only going to do so much when you have your utility bills, you have rent, you have insurance, and the rest. It's just, if this had been a 15-day lockdown, it would be very different. But because it got dragged out so long, I mean, people are tapped out.
Yeah, and I mean the scary thing, and this is coming from Reuters and MSNBC. You had, I think they said 1/3 of adults over the age of 35 have less than $1,000 in cash savings. And, we call it a rainy day fund, not because we're asking, if there's a rainy day. We know it's going to happen. For most Americans, they would have to go ahead and take out a loan or go into debt if they, got like a $500 medical bill or something like that. We live in a country where this is my one criticism of libertarians, despite me being a very, libertarian, conservative minded person. We often yell at the government for being fiscally irresponsible. But when you look at the rate of, credit and debt within the American consumer class, it's ridiculous. And I'm pulling up some numbers right now from smartaboutmoney.org. That's smartaboutmoney.org. Only 93% of millennials, so 18 to 35 right now, actually have a savings account. So 7% of millennials don't. They just save nothing. 60% have a retirement account. 28% have some form of financial investment, an IRA, a mutual fund, a brokerage account. 44% have at least a bachelor's degree. So what we can gain from that is that they're dealing with degree inflation. They probably have at least like $20,000 at minimum of debt. I think the average number is $20,000.
Yeah.
Yeah, I mean that's yeah. I mean it's ridiculous. And then what's odd is that 45% actually own the homes they live in. So we have this weird balance between wanting to increase their likelihood of having a larger income, while at the same time only depending on one stream of income to only provide for their basic needs. So they're not saving, they're barely investing, they're not paying for things in cash, and more likely than not, their first big adult challenge upon graduating from high school is dealing with debt. It just seems it's insane.
Well, one of the things that, everything has a silver lining, and the recession that we've just had, I personally think it's probably over technically. But anyways, the recession that we had, even though it was caused by an external shock, it was still a recession, which means weak hands got shaken out. And that might seem a little cold, but it's the truth. You have companies have way too much debt. They've been punished. A lot of them have had to go into bankruptcy to restructure. And I think the same thing's happening with people. People are having to reevaluate their entire credit risk.
Yeah. Yeah. Go ahead.
No, go on. No, go ahead, please.
No, there's like a delay. So every couple of seconds, I think you're done. You're actually still talking. So I think it's something on my end. I apologize.
Yeah, it's fine.
Yeah. So, no, I mean, there's got to be some good stuff that happens out of this. And if people can go ahead and learn to save money, if they can learn to go ahead and create multiple streams of income, that's going to be it. Because I still think many people have this idea set up by the baby boomer generation and maybe still their parents that, you'll be able to work at the same job for, 20, 30 years.
Yeah, the company man.
Yeah, and then you'll go ahead and be able to retire in your 60s and you'll still get, Social Security. For millennials, they don't have that. I mean, I know that I have probably switched jobs, in the past 5 years more so than most of my friends, but I don't know anybody, who's a millennial who has been able to actually stay at the same job, for more than a couple of years before looking for other options. It seems like with millennials, one, we don't like to stay still, either because we're nervous or because we're just trying to look for better opportunities. But even then, it's like everyone has a side gig and everyone has an MLM. And everyone has, another way of trying to be an affiliate marketer. It seems like millennials, despite the fact that everyone can look at the basic numbers and think, oh, they're financially irresponsible and they're also financially damned because of the actions of their parents, it also seems like millennials do nothing but constantly work.
I'm very I'm proud of the millennial generation. For some things, there are other things that I'm not so proud of, but I think this goes back to what I was saying with 2008 sort of scarring people. The millennial generation is very entrepreneurial. It's very much a self-starter cohort from at least the perspective that I have.
For people that just graduated maybe high school or college this year, and they don't really know what next step they should take. What would you tell people that are, entering upon one of the strangest times in American history, where it's like we're hiring, but we're not hiring? There are jobs, but they might not be the jobs you want. And, given the pandemic and given the, the relative safety that some people have maybe in the suburbs that they don't get in the city because of all the crime waves that are occurring. I mean, this seems like a time where a lot of people are probably just thinking, I just need to maybe do something part-time and just stay at home and wait for things to get normal again.
I think that's definitely a thing. This is just an anecdotal thing, but I've been in a few Ubers recently, and every single one of them, we ended up having a conversation about how they're trading stocks, which to me is interesting. It's like, if, maybe one, okay, but I've had 5 or 6 that are doing it. And
like they're day trading, or they're just trying to get into investing?
They're day trading, they're day trading penny stocks, that type of thing, but at least they're expressing interest in it. And in addition to that, there's this, incredible movement of like the democratization of markets. There are so many ways to participate at this point. Getting a brokerage account or setting up a Roth IRA takes minutes in today's world with the apps.
Yeah, I mean, it's amazing how many people I know didn't start investing until they learned about Robinhood. And Robinhood is that, Robinhood is that thing that taught me about how I should better use my money, because at first I lost money. I think, it has this like positive and negative effect. One, I see people that are day trading, and it's like, listen, even professional day traders know that if you're trying to day trade, you're going to lose more money than you're ever going to make.
Oh, 90% fail. It's a tough thing.
And it's one of those situations where it's like, yeah, we have the tools, but people don't have the knowledge to do it. I've got some friends that I've been friends with since high school, and I got them both on Robinhood, so we all each got some free stock out of it. I had one friend who immediately lost hundreds of dollars of cash that he should not have been spending on there, essentially gambling by day trading. And he didn't know about capital gains tax. He didn't know about dividend stocks. He didn't know what he wanted to do with it. And then what would happen with the other guy is the moment that his paper value started going down, what did he do? He freaked out and he sold everything.
Yeah, no,
it's this weird relationship between having the ability but not having the knowledge.
It's a dual-edged sword. You wouldn't let a layperson fly a plane. You know what I mean? There's a very specific example, Hertz. A lot of people got really burned trading Hertz. They saw, hey, it's a penny stock, it's really cheap, which is not really the way you value companies. But they see low prices and say, hey, this is Hertz. This is a big company. A lot of people bought it, even though they were going through bankruptcy, and a lot of them got wiped out. So it's a bit of a double-edged sword. I mean, I wish that these apps would focus less on gamifying the experience and focus more on educating its users how to actually go about investing, the different types of investing, the different risk strategies that you can employ. I think they would be doing a great service to people if they did that. Yeah,
gamifying is a good way to describe it, because essentially it's become. I mean, did you hear about that guy that had on his screen when he went onto his Robinhood app, he had like a negative $75,000 balance, and he didn't understand what it really meant, so the guy killed himself. He was 23 and he killed himself.
No, I did not hear that. That's terrible.
Yeah, it was horrifying. He thought that, and it was either a glitch or something else. And it happens right around like March 12th. So right around the time of the big crash. He thought that's how much money he owed. He didn't realize that that's just the paper value of the equity he currently holds.
Correct.
So he ended up seeing that, thinking, "Oh my God, I have to pay Robinhood $75,000 now." And he made a permanent decision for a short-term issue that was really just just something he didn't understand. And it's funny in a way, because we have all these opportunities, but like you said, we've gamified the system so that way anyone can get into it. I do see it being more positive than negative because we're going to have outlier situations like this. I mean, it's just we can't have one entire institution be based off one bad incident. But what was funny,
it makes a healthy ecosystem. You know, my views have changed a little bit over the last few years, but I'm a free trade guy. I'm pretty libertarian, and the idea of more market participants makes me happy because it means the price discovery and the process of valuing companies is going to be that much more accurate. You have more people transacting, which just adds a lot of liquidity and, you know, is good for like the health of the market. You want to have a lot of active participants. A couple of years ago, there was a big trend called high frequency trading where algorithms literally were driving 80% of the daily market move. Totally broke the market as far as I'm concerned. So having this influx of new retail traders is, I think, phenomenal from a market perspective.
there was there was a situation like in 2016, 2017. I forgot what it was called. It was basically this automated system that would go ahead and basically do rapid foreign currency exchanges, but they also included cryptocurrency. And it was basically the system where people went ahead and thought that, oh, I'm just going to make money incredibly easily because if I go ahead and invest X amount of dollars in here, because I'm basically including crypto with my Forex trading, you know, obviously I have to make money. And I think the whole thing shut down because the algorithms themselves couldn't even move as fast as to predict, you know, human behavior ultimately between crypto and foreign exchange currencies.
The way they get away with it in the market is kind of like it's a lot of minutia. Basically, they can jump to the front of the line on orders because their headquarters are literally hundreds of feet from the exchanges. So literally, just because of the speed of information on their cables, they can jump in front of people. Now the SEC has done a lot to put them back in a box, but it was an unhealthy period of time.
What age did you actually start investing?
15.
Wow. Did your parents help you out, or was this something that you did yourself?
A little of both. So I'm very fortunate. My parents both have pretty good jobs. So I'm coming from a fortunate background. When I was 14, I started to notice all these white earbuds. You know, people wearing these white earbuds. I'm like, well, this is interesting. I got a Mac Mini. And I was like, this computer is great. How could not everybody be using it? So I went to my parents and asked to borrow some money. I bought Apple, and then Apple happened. And, what else could I say? Apple happened, and I was able to return the money to my parents. And that really, you know, I had been a big geek. Like I was a big tech geek prior to that. But that experience made me open my eyes. I said, hey, this is pretty cool. You know, I can find companies I like, and I can make money while doing it. So I kept going. I explored Forex. It's an interesting market. I kind of call it the Wild West of asset classes just because there's not a lot of regulatory bodies over it. Did that for a while, then switched to equities. So, you know, individual names like Apple, IBM, those types of things.
Yeah.
And then ultimately I ended up trading futures, and that's what I do today.
That's crazy. I was not doing that at 15. And, you know, the one thing that I've spoken about many times on my show is that I'm a long-term dividend investor. And I didn't even know what dividend investing was until probably a year ago, to be quite honest. And it's my goal. Ultimately, I want to be able to retire by the age of 40. So I'm living below my means. My costs to basically, you know, live and everything. My costs are very, very minimum. And, you know, I save and invest like a fucking monk. And when it came to dividend investing, you know, that was something I didn't learn about until I found something on YouTube. And obviously you have to be extremely cautious when you're going to YouTube for investment advice. But I found a few good channels that at least pointed me in the right direction. And I mean, the idea of passive income through the stock market alone is something that you do not learn in school.
No,
you not learn that really anywhere.
No. And I find that to be one of the biggest issues. So we were talking about kids, young adults coming onto these platforms. I wish the platforms would explain things like dividend investing. But where are these guys that are coming into the platforms, where are they supposed to have any know-how from? They don't, a stock, a bond, maybe the two, but beyond that, what sophistication level do you really have? So I wish they would do more to sort of, I guess, reduce risk for their clients. I think that needs to happen. But
yeah, it's one of those things though, where it's like, and you mentioned this earlier, it's like, it's just so easy to download, and all people hear is you get a free stock. You don't have to pay fees. It's as easy as a swipe of a button. It's crazy because I agree with you. I love how easy and how simple and how democratized the process is, but there are kids right now that are getting involved in it. Yeah, they have to say they're 18 and everything else, but you have the system out there that is it brings up its own unique set of challenges.
Yes, it does. And to think that, I said that I started when I was 15. That's 3 years under 18. So, I found a way to do it, and I know others find a way to do it. So I guess part of that race to like the democratization, what we're talking about, big part of it is all the brokers have fought with each other for market share, and commissions are now zero. So the transactional cost of participating isn't even there. So to a layperson, it's like, oh, I can buy this stock. It's free for me to buy this stock. It's a cool company. I like their products. That's sort of what's happening. It's these very, very low to zero commission rates. And just one thing I wanted to add about what you're talking about with dividend investing, it would be good, I think, if you could learn in high school, you could have like a financial literacy class, teach you about insurance, teach you about taxes, teach you about basic investing. One of the main things that needs to be driven home is compounding interest and how powerful that actually is.
That is the only time, and compounding interest is the only thing that will help you free yourself.
It's so true.
And that it's an important thing you brought up though. And maybe this is the conspiratorial end in me, but I genuinely don't believe that the US government has a vested interest in teaching people how to be financially literate.
I don't disagree.
I don't think this is a left or a right issue.
They don't want people to understand what the Federal Reserve is doing. People would be in the streets. I don't think you're far off. I'll be honest.
Like from what I gathered, and I've always been a very entrepreneurial person. I've got I'm like a Jamaican. I have side gigs for my side gigs. My biggest thing for me has been become financially independent, retire early, have multiple streams of earned income, and develop passive income, sources. And I do that through my dividend investing, and I've also written books. I monetize my podcast, so I'm trying to do all of that. I'm trying to set it up so that it will be healthy long term. And I'll always be able to make money while I'm sleeping. It might not be a lot now, but it's compounding over time if I put it in the right places. But, right. In school, I just felt like I was told, listen, if you weren't born rich, you're not going to be rich. Just go to college, get a job, pay debt, buy shit, pay
taxes.
Here's
the cookie cutter life.
Yeah.
Yeah, no, I mean, if you say you opened up a brokerage, IRA, whatever vehicle you want to go with, you put in, $2,000, $2,500, and you're annualizing about 7%, which is roughly what the market returns on a yearly basis over the long term. Oh boy, I forgot my thought. Wow, I'm sorry. I just totally forgot my thought. But go ahead.
Yeah, no, it's one of those things where it's like, time and compounding interest. That's something that we don't teach in basic finance classes.
Oh,
I feel like, I feel like, and I didn't take a finance class in high school, but, I saw the textbooks, and all they teach you how to do is basically balance a checkbook. That's all it is. A basic high school, public education econ class is basically, it's all Keynesian economics. And for the personal finance portion, it's understanding debt and credit. That's all it is. And that's nothing. That's like beginner entry level shit. But there's so much extra you need to know.
That's like reading half the book. You're looking at Keynesian economics. Of course, they're talking about credit and debt, but there's a whole nother side to the economic debate, which is largely playing out in real time right now. I mean, we're giving a real test to long-held economic theories about government stimulus spending. Just to circle back, what I was going to say is if you put 2,000 into a brokerage account, you average about 7%. That's 19,000 after 10 years when you're compounding it. And I don't think people fully appreciate just how quickly wealth can accumulate when they're doing that.
I think one of the biggest intimidating factors for people is that I jokingly call myself a math impaired American. Let's just say I had to retake a ton of math classes in college, and I'm happy that they stopped me at statistics. But you don't have to be a math or a finance whiz to understand how to just work within your means and set yourself up for long-term success. Because, you don't have to go ahead and I admit this, I'm too dumb and I'm too slow to even try day trading. So I'm not going to lose money doing that. I might as well go buy scratchets. I might as well go do that. Whereas if like dividend investing, I mean, all you really need to understand is one, do you know the companies you're investing in? Two, are you diversified well enough? And three, do you understand what the company itself does, thus giving it its reliable dividend? Or are you chasing a dividend yield? Because one of the mistakes I made very early on was I was going for very unstable companies, but I saw, oh, this is a 15% return, a 15% yield. Oh, I'm going to go for the places that have the highest dividend yields. Only understand that was part of the dividend trap. Companies do that because even though they don't know whether they're going to make a profit or not, they need more investors than they're willing to lose. So ultimately, they're going to go ahead and increase their yield. Therefore, no wonder the individual stock price for that company that has the 15% dividend yield is like $1.25 a share.
Right.
Like you're not even going to get anything out of it, even if you do invest well. And even at that point, that the dividend yield that you're seeing right now is unreliable. It could be cut. It could be frozen. And the company might go into negatives incredibly fast. I saw that with a lot of REITs I owned. A lot of
REITs got yeah.
When people couldn't pay their rent, REITs got screwed.
Yeah, I mean, it's only because of forbearance that they haven't all gone belly up. I mean, I remember at the peak of things, I was really concerned that we were actually flirting with an 2008 style crisis where solvency wasn't necessarily the problem, but liquidity was the problem in the sense that banks froze up just because mortgage-backed securities play such a big role in their daily funding operations. So I think we really dodged a bullet with that. I guess it's a testament to the resilience of the American form of capitalism.
Yeah, I mean, despite
it can be flexible when the time demands it. Yeah,
I mean, despite all the attacks that the stock market gets, I mean, ultimately we know two things. One, no one understands it. Freaking Warren Buffett says, "I don't even understand it." So when one of the richest men,
I have no idea what's going on half the time.
Yeah, I mean, no one can game it. Nobody is smart enough to game it. And what I've always noticed is that all my friends who say that they're day trading and they know how to game the system, one thing I've also noticed is that they're all poor and they all have impulsive behaviors. I'm not saying that to attack them. It's just a general statement I've seen from observations. But secondly,
it's very true though.
Yeah, I mean, it's like gambling. It's literally just that. And then the second part is, despite what anyone might say, the best path to make stupid, easy, passive income also comes through the stock market. So, this isn't something that nobody has access to or only some people do. Anyone can just learn a few basic things and they can make money without having to really do much further investigating.
No, and one component that gets missed by a lot of people, and this just has to do with knowing a little bit more about the types of securities and what you can and can't do. But a lot of people have portfolios that are hedged in no way. Or put differently, you might have someone that works in healthcare who owns a lot of healthcare stock. And what I would say there is you have too much exposure to healthcare. If there's a downturn in the healthcare ecosystem, you're hitting it personally, but your stocks are also taking a hit. So it's important to think about that when you're building yourself a portfolio.
Absolutely. And, kind of circling back a little bit, how far into your degree were you before you dropped out from NYU?
I was a rising sophomore.
Okay. What was your degree that you were pursuing?
I was pursuing an econ degree with a minor in political science.
Oh, wow. You dodged the bullet. As somebody that has a degree in political science, I can tell you that all it's really good for is telling people interesting stories about how governments fail people.
And a mandatory reading of the Communist Manifesto, depending on where you go to school. I've had to read that thing at 3 different schools. I got fed up with it. Yeah, no, I went to a boarding school where they pushed that stuff as well.
Wow. It's always the champagne socialist that will take your money and tell you to read Karl Marx.
Uh-huh.
Yeah, go ahead. Go ahead.
I was just going to say the economics department, I just don't agree with the school of thought that they teach. So classroom experiences almost turned into battles with the professors. There was one guy that I got along with. He taught financial history and talks about all the different recessions, that type of thing. Did very well in that class, but micro and macroeconomics, it was a battle. I really did not get along with the professors.
Oh my gosh. Like I don't, like, I'm one of those libertarians. I don't hate Keynes. I understand where he was coming from. But he came up with a system that we basically treat as dogma right now. And to even question that is heresy. But, having not, gone through school and getting those degrees, I mean, what were your sources of learning about this stuff?
So my grandfather was a bit of a businessman. He had a lot of different little things going on, owned some real estate. He owned a car dealership. We would talk, and it got me interested in finance. He owned a lot of bank stocks, which, I thought, well, I'll read more about these so I can talk to my grandfather about it. And that sort of transitioned to really a self-taught path. I recommend this to everyone. Reminiscence of a Stock Operator. It's the first book I read. Fantastic book about a guy named Jesse Livermore who traded back in like the 1910s and 1920s. It's a really good intro to investing and trading. A lot of important lessons. But truthfully, it's been self-directed. I mean, Google is a very powerful professor.
I tell people I'm a proud YTU graduate, and they're like, YTU? And I'm like, yeah, YouTube University.
Exactly. No, there's a lot out there. And I've been fortunate enough to network with a fair number. Being in New York, I had access to a lot of different people that were very much in the financial markets. And, over time, built a good circle of friends that I could talk to, run ideas through, stress test ideas with. That was sort of the last formal period of education I had. But by and large, it's been self-directed.
What was the drive for that? Because, I mean, everyone has, different hobbies, interests, things that make them curious about the world. But when it comes to money, I always, I think it's a societal thing. It's like there's always got to be something different. Was the intention to become rich? Was the intention to, have an ability to do something specific with that money? I mean, why specifically that?
Honestly, money was probably one of the least contributing factors.
Really?
Which I actually think is a good mindset. If you don't worry about the money, you do things right, the money will follow. I've grown up with that in my mind. But it really boils down to the fact that I like to be right. And there's no better, it's just really what it is. And it's, there's no better battlefield of ideas and, intelligent thinkers than the stock market. So to me, every day I'm competing against every other guy that's out there.
Yeah, I totally get where you're coming from with that. And it's been an awkward change amongst the conversations with my friends, because I had a couple who were like, all you want to do is talk about money now. All you want to do is talk about business and how to invest and how to achieve more wealth. And it's like, why? And I just tell them, it's like, listen, money is the only thing that can directly provide me one additional thing, and that's time. And my thing is, I know I'm going to die one day. And what I've learned through having to really, still build myself up, it's that money is the only thing that gives you two things. It gives you more time if you know how to use it, but also gives you more options. And I don't think anyone has ever lost anything by having more time and more options. And money is just the only way to achieve that.
Completely agree. I look at money as a vehicle.
Yes.
It's there. Yes, it can, improve your life in sort of superficial ways. You can have a nice car, you can whatever. But when you start accumulating real wealth, you can start doing new things and new projects. I mean, I'm a pretty entrepreneurial, creative guy. I like delving into the creative space. And a big part of it was, hey, I want to be able to do real estate development, but I need more capital to do it. Not, I'm going to trade because I want to make a bunch of money and then I can do a development and make more. I genuinely want to do the real estate project. So that's I guess at the core of how I look at money is it's just a vehicle for the next thing. You just have to manage that vehicle and make sure it doesn't get too far ahead of you or too far behind you.
Yeah, one habit, and I think habits. I mean, this is what I'm a big Dave Ramsey acolyte, and it's like you're either in charge of your money or your money's in charge of you. And one really expensive habit that a broke millennial should not have is watches. For anyone that follows me on Instagram, you know that I'm a wristwatch whore. I collect watches, and that's not a hobby for poor people. But it was one of those things that when I finally got like a real, like grown up job, I found myself making more money, and my first thought was, oh, I could buy this watch. And eventually I just kept accumulating shit. And it was always one of those situations where it was impulse. And it got to the point where when I really began to start having to pick up my own bills, I really had to start, planning long term and not just for the next paycheck, that it became clear to me that, my habits are what's ruining me. The money is not the problem. My impulses and my behaviors are the problem. And, the one thing that I think really taught me a lesson was when it's like, how did I get paid yesterday and now I don't have enough money for the rest of the month? It's like there's more month at the end of the money. My big mindset shift after that was I should have more money at the end of the month. And, I think it's that which is the most uncomfortable thing for people, because ultimately, people say that, money's the root of all evil. But ultimately, I think it always just comes down to what you're doing with it. Because if you know what you're doing with it, the money is a tool. It's a vehicle. I think that was the best way to describe it. As you said, it's a vehicle. If you don't know why, then you're going to let the money dictate what your why is.
Yes, I completely agree with that.
So what are some of your goals going forward? Because I mean, you've done so much already. What's your like HD vision for where you see yourself in like 10 years? Because no one does this without having, something clear in mind.
So right now it's the way that my company is set up. It's a family office. We have a couple investors, and I basically call the shots. It's pretty cool. So that is how it's currently set up. The problem with that is we can't take a lot of clients and friends just because there are certain regulatory issues with raising money from the general public. You have to be an accredited investor, which means you need a net worth of a couple million, or you need to be bringing in like 400,000 a year. I'm forgetting the exact numbers. But we're unable to take a lot of clients. So what we're doing now is building out a registered investment advisory firm, which will allow us to onboard a lot of clients. I'm very excited about that. And that will run congruent with the family office that I mentioned. And from there, I'm not sure. We've been talking about opening an insurance agency. It makes sense cross-selling between, hey, we'll do your financial management. Why not buy insurance through us, or vice versa? So that's sort of the 5-year plan. And then it just gets more and more ambitious from there.
Yeah, I mean, what you said just up front, like you actually had like an actual idea of what it is. I feel that for a lot of people, and this is really regardless of generation, I think unless life really catches up with you, I don't think many people have an understanding of what that looks like. One of the things that always stumped me was like, what's your 10-year plan? And it was always, well, just continue working. And it always came up, when I would speak with some of my older colleagues, it's like, some of them are getting ready to retire, and they're gonna be 65, and now they're wondering whether or not they have the savings and the investments to do that. And there's something scary about looking long term. I don't understand why people are so afraid of that, because it's like, as you get older, you start to really realize that time catches up with you fast.
It does.
And while we might look, a few months into the future, it doesn't hurt to have goals, but I feel like people are somewhat goal avoidant.
Well, it's uncertainty, right? And that humans hate uncertainty. It causes anxiety. It causes a lot of problems. So I think when you're talking to someone saying, "Hey, what's your long-term plan?" They're more worried about how do I get through next week and how do I get through next month, rather than, well, where do I actually want to be in 10 years? What do I want that life to look like? And how do I get there?
I'm curious what you have to say about this. What do you think of like some personal finance celebrities, so to speak, like Grant Cardone and people like that? Because like I've looked at many of like the big financial gurus online, and like I get it that what they're selling is basically a lifestyle brand, and sometimes they give you good products. With Grant Cardone, like I liked his book, The 10X Rule. I really liked it. But at the end of the day, what do I know about Grant Cardone? Grant Cardone doesn't put out all these shows and all this content and constantly throw shit on your Instagram because Grant Cardone loves you and just wants everyone to be rich. He wants more people to invest in Cardone Capital. And in many ways, I see a lot of these individuals, they're acting no different than the devices, which and the tools and the capabilities like Robinhood, they're causing so many other, questions about, where does the line between responsibility and impulse end? What do you think that people like that are doing overall a net positive for the general public?
No.
Okay. Well, that gets to it.
No, I honestly think there are a lot of, like, I don't know what the right word is, scumbags. They're in there for like a get rich quick scheme. It's actually borderline illegal to solicit the public for funds for a hedge fund or however he has his vehicle set up. That's actually a pretty gray area. Yeah,
like with Cardone, it's basically he's a real estate investment trust. That's all it is. And when you actually look at, how quote rich he is, he has a lot of assets. He doesn't actually have a lot of cash. And he's just incredibly leveraged. And the whole thing is contingent upon getting more people to go ahead and invest with him and making sure that the people that he's renting out, either commercial or, private, residential property to are actually paying their bills. They're paying.
Well, when it comes to like the trading gurus and that type of thing, you're sort of buying a personality. It's, they're kind of intense. They, the perfect manicured beard, the background. It's really like a pressure tactic. But these guys do blow up. I mean, it's a thing where, X company just doesn't exist in a few years. I don't necessarily appreciate, that's not the way to put it. I find it a little insulting to say, hey, you take my 45-minute course and I'll teach you how to day trade. Because it didn't take me 40 minutes. It took me, 15 years to get where I am.
Well, even then, you click on the course, and the course is very basic shit you could Google. But then what they want to do is they want to sell you the upcharge package. Get into my mentorship. Service. Yeah, get into my mentorship group.
Well, I'll put it this way. If they were doing that well, they wouldn't be doing what they're doing with the subscription service.
Wow.
You would have a closed fund and you'd be managing millions and millions. So I look at them through a very skeptical lens.
I definitely had to learn that the hard way. I will admit that. That's the beautiful thing about YouTube, and it's just like everything else. It's all like if I've sounded pessimistic, I'm as optimistic about certain things as I am pessimistic. And it's like with YouTube, you can learn so much from YouTube. Radical personal finance I learned on YouTube. It's a guy that genuinely has an interest in people, and he's not selling anything. He has a Patreon for additional content, but his content is just good, and he does it from the right place. But you have all these people on YouTube that are telling you, it's like I was a college dropout and I was broke and I made $1 million overnight doing this one thing. I'll teach you that one thing. And it's like those people are there. Yeah.
I hate it.
Did you ever get scammed by any of them?
I bought a subscription service once when I was 17. It worked for about 3 days and then it blew up. I was like, okay, experiment over. Trust myself. I have to admit, I do use Twitter as a bit of like a subscription service. I follow a lot of guys that I think are very bright, and that's different than pushing a course. They're just talking about what they're doing intraday. So I look at them, and honestly, I get good ideas from those people. So I can't, just because you're public about finance does not necessarily mean you're like a grifter or whatever. But you do have to look carefully and do your due diligence on who you're listening to.
Absolutely. Harrison, we're running up on time. My last question is this. For people that actually want to take more control over their finances and actually learn how to control their money so their money doesn't control them, where are some of the best places to start? What are some of the things that you want them to know so that way they're starting off in the right direction?
Well, a site that I would definitely recommend is Investopedia. They have great explanations on pretty much anything in the financial world, even sort of esoteric products. So I refer people to that. I strongly encourage people that can to start a Roth IRA. It's one of the most powerful savings vehicles there is. And if your financial situation is right, open a brokerage account, put $50 aside each payday, and just start exploring. You won't learn until you try it.
Absolutely. Harrison, if people want, ask you questions, reach out, keep up with you, how could they do so?
Sure thing. You can get me on Twitter. It's HDunn, DUNN, number 2. And I'm always happy to chat with anyone really on markets. I love it.
Awesome. Harrison, it's been a blast. I'm going to totally pick your brain on things after the show. So thank you so much for coming on.
Hey, thank you very much, Remso. I really appreciate it.
Folks, there are people like Harrison, and there are many other, individuals in the world who they have their act together, but it came with knowing their behaviors. It came with knowing how to fight impulses, and it came with self-education. And, I have a degree from a good private university, but ultimately, and I do genuinely mean this. I learned more from YouTube, and I've benefited more in my professional and personal life from podcasting than I did, because I'm an inherently curious person, and I love to reach out and just totally ask a million questions to folks. So if this has helped you, please go ahead, get there. Leave me a 5-star rating and review on iTunes. It costs you nothing, and it's everything to me. And check me out everywhere social media wise at Hey Remso, and find me on Parler at just Remso. So at Remso, at REMSO. If you ever see Remso 2 pop up, go ahead and message them, call them a loser. As always, this is On the Run. You're listening to another We Are Libertarians show. This is Remso Martinez. I thought I had a thought. I guess I don't. Good night. Talk to you later. Bye.
Check out our other shows and more from the We Are Libertarians Network at wearelibertarians.com.